You put $1,000 in your savings account and left it there for a whole year. Your reward from the bank? 10 cents. Not $10, 10 cents. Now here's the part that should make you angry. The bank took that same $1,000 and used it to make many times that, lending it out, earning interest, all on money that's technically still yours. This is how banks quietly make money with your money, while paying you almost nothing to hold it. Once you see the machine, you'll never look at your bank the same way.
Most people picture their savings sitting safely in a vault somewhere, waiting for them. It isn't. The moment your paycheck hits your account, the bank doesn't store it, it puts it to work. Within days, most of your money has been lent to someone else. A mortgage, a car loan, a business. Your balance is just a number on a screen saying the bank owes you. And banks make money 3 different ways off that arrangement. Let's start with the biggest. The core of banking is almost embarrassingly simple. Pay a little for money, charge a lot to lend it. They pay you about 1/100% on your savings. Then they take that exact money and lend it out, a mortgage at around 7%, a credit card at 22%, or they just park it in government bonds paying 4 or 5. The gap between what they pay you and what they earn is called the net interest margin, and it is the entire game. How big is that gap? JPMorgan Chase earned $95 billion from it in a single year. $95 billion just on the spread between what they pay depositors and what they charge borrowers.
Now about that 1/100%. The national average savings rate is around 1/3%, already tiny. But the biggest banks, Chase, Bank of America, Wells Fargo, pay just 0.01%. Meanwhile, high-yield savings accounts with the exact same government insurance pay over 4% right now. Put $10,000 in a big bank savings account and you'll earn about $1 a year. Put the same $10,000 in a high-yield account and you'll earn over $400. Same money, same safety, 400 times the return. The big banks pay you almost nothing, not because they have to, but because they're betting you won't bother to move it.
Here's the second engine, and it's the one that feels almost unbelievable. The bank doesn't just lend some of your money, it lends out most of the deposits it holds many times over. At any given moment, only a small fraction of everyone's money is actually sitting at the bank. The rest is out in the world, working, earning interest for them. It only works because we don't all show up asking for our money on the same day. That trust, like that quiet assumption, is what lets a bank turn your idle deposit into a constant humming profit engine.
And then there's the third engine, the one you feel most directly: fees. Overdraft fees, monthly maintenance fees, ATM fees, wire fees, minimum balance fees. Individually small, collectively enormous, and they fall hardest on the people with the least, the ones most likely to overdraft or dip below a minimum. For the bank, it's almost pure profit layered on top of everything else. So how much does all of this add up to? In a single 3-month stretch, the entire US banking industry reported about $79 billion in profit. JPMorgan alone made $57 billion in a single year. A huge share of that is built on the simplest trick there is: using money that's technically yours and paying you almost nothing for the privilege. You might ask, if high-yield accounts pay 400 times more, why does anyone leave money in a big bank? One word: inertia. Switching feels like a hassle. The account's already set up, the direct deposit's already linked, and moving it feels like more effort than it's worth. The banks know this better than anyone. Your reluctance to spend 20 minutes moving your savings is quite literally worth billions to them.
So here's what it really comes down to. The money sitting in your big bank savings account isn't earning for you. It's a near zero interest loan you're giving the bank, so they can lend it out and keep the difference. The fix takes about 20 minutes. Open a high-yield savings account still fully insured, and let your own money earn the 4% instead of them. You don't have to beat the banks at their game, you just have to stop playing it for free. If you want more of the money machinery hiding in plain sight, that's the whole point of this channel. Subscribe, and I'll show you the next one.